decision. Let's bring in senior markets correspondent Kevin Green to get us across what he's seeing as we get our feet back under the desk this morning. Kevin, nice to see you there. Hope you had a nice weekend. What levels are you watching today?
Yeah, well, obviously, Sam, we are seeing a little bit of a breakdown in the S&P 500 right now, trading at around 6370, and this is going to be a key area for us to try to be able to defend here. We have about another 20 points until we get another firm area of support. But if we're looking at the longer-term time frame, we've been in this upward channel since May of this year. Today, we are actually breaking below that channel here, breaking below the 20-day moving average. And the next area that you're looking at as far as an area of support is going to be that yellow line, which is going to be the 50-day moving average, sitting at around 6324. Here, but what we would like to see is actually a pretty quick recovery, and that's what we've seen over the last couple of months or so. We do kind of break these levels or get very close to the support area, and then we have buyers really trying to step in, try to recapture the primary trend, which is to the upside here. You get a little bit more concerned actually if you break down below 6200. That's where you would get very concerned if you are a bull in this market. If you're looking at the intraday levels that I'm focusing on, 6400 was going to be your first area of support. We opened and then pretty much flushed right below that. We kind of talked about that in morning movers here. Next one that you're looking at is 6370, which is pretty much where we are trading at right now. And at the open, which has only been around 2 minutes, the 6350 puts actually did see a spike in volume, so that's going to be your next area. To the upside, 6470. Let's see if we have a recovery type of day here, but we are breaking down. We are seeing a round trip from the Jackson Hole, Jerome Powell speech, where we did see a significant move to the upside here for the S&P 500. Now that has been lost, and obviously we have a seasonally weak period when it comes to September, and we just have to kind of brace for that. October as well, if you're looking at the first week or 2 weeks of October, is also very difficult. So a lot of economic data on the headlines this week. Last thing I will say when it comes to just the trading day, be mindful about the ISM manufacturing data set that will be coming out here at the top of the hour. That actually has been fairly bearish for the market as well. Prices paid is going to be the key area. You'd like to see that actually starting to decelerate and not actually increase as prices paid goes up and new orders go down. That creates a stagflationary picture that ISM manufacturing has been painting for the last 6 months, 8 months or so.
Okay, some very consequential economic prints very much on the docket to keep an eye on as we head into this month. I'm just wondering, we've seen the VIX rallying. We're up at 19 now, so very much a big jump in volatility. What are you watching there?
Yeah, so seasonally, this is kind of on path. And actually, if you look at the last 2 weeks of last month, we were actually diverging from this path. And now we are actually catching up, where we do see volatility kind of spiking. And it usually kind of stays elevated over the next week or so until we start seeing it subside. Let's see if that's actually going to happen this time around. So this is normal. September is very tough. And the seasonality chart is starting to kind of align a little bit more to past trends that we've seen over the last 15 years. I also have a chart in here that's actually showing the VIX minus the futures contract, looking at any type of backwardation or basically having front month VIX, the VIX, being priced higher than the futures contract. That just means that there's more near-term volatility and uncertainty that's being priced in than in the longer term. Now, last week and pretty much the week before that, we were kind of talking about this normalization of the curve was really aggressive, especially if you're looking at the premium, the amount of premium or the distance between those two products here. Now we are seeing a re-rating to the upside here, where we have this backwardation taking place. What's nice about these backwardations, though, Sam, is that they usually do not last for too long. Maybe it's a day or 2 days, and they usually do provide decent bounce opportunities. I'm not sure if that means all-time highs in the next week or so, but we are actually already kind of re-rating a little bit higher, and rightfully so. Once again, volatility was actually probably way too low, sitting at around that 14 level. Today, we're pricing at around a 1.8% move to the upside or downside. 1.1% to move to the upside or downside. It's a little bit higher right now. We're pretty much sitting at those particular levels. So volatility has not really caught up to the realized vol that we are already seeing in the market here. Let's see if we have VIX re-rate higher, or if this is kind of top tick for today and we start seeing that kind of level off and potentially subside after we get some of this economic data.
Okay, and you've been taking a look at the staples chart. What stands out to you there, as we have got also the dollar jumping in this morning's trade?
Yeah, there's a lot of narratives. The tariff news. Are we going to have to pay back these tariffs? What's the Supreme Court really going to do? And that could be driving yields a little bit higher. But what's interesting about yields, and we'll talk about this in a second when it comes to staples, yields were already hitting a fairly low level at 4.21%. We have not stayed below that level for more than one session, pretty much for like almost the last 5 months, 6 months or so. So I think we're seeing a little bit more of a technical bounce to the upside. Obviously, the news headlines are also fueling that here. But you are seeing the strong dollar. And if we were concerned about these tariff payments or us having to pay those tariffs back to these customers and things of that nature, dollar probably would be a little bit more weaker than gaining strength. And I think if you pair the dollar with staples, that'll really tell you the true nature of this market. Is this a sell everything market, or is this now looking at a rotation? Are the stocks like Costco and Walmart going to catch a little bit of a bid because potentially this court case could actually be a tailwind for them when you're looking at top line revenue? So staples are going to be on the radar for this week. Dollar's also going to be on the radar. Let those two be your two guides, as the 10-year Treasury yield itself is kind of re-rating on a technical basis, probably more than the economic growth or landscape that we have right now.
Yeah, you raised such a fascinating point. I was just talking to Michelle Gibley about that because it could be messy and complicated, but we are seeing that the markets are speaking. The consumer staples, the only bright spot in what has otherwise been a down market as we get up and running this morning. So that is certainly something to keep an eye on as we do perhaps see those tariff refunds. Let's see and watch this space with regards to this ruling. Kevin Green, really appreciate your time. Thank you so much for